The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Thursday's market action, soybeans and soybean meal led us to the upside. We got a third day in a row of old crop soybean sales. Maybe that's a little unexpected for the trade. We'll talk about that. Corn up a little bit. The wheat market, though, kind of settled back, and a mixed day in livestock. Plenty to go through here on today's program. We welcome in Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to have you back with us here this week. And, we had a June WASDE report Wednesday. Kind of felt like we had the report, and then we immediately turned our attention back to weather. It feels like weather's kind of the big driver once again here, maybe helped us propel the row crops a little higher on Thursday. What do you think?
I think that's exactly right. And I think you got to look at the calendar, and you got to think about our entire growing season from down in Texas and Louisiana all the way up through into Canada. And this June 15th is kind of the pivotal kind of big time period here, where all year long we talk theoretically about what crops could be and what they look like. Now is when in my book, it really matters. Not that spring doesn't, but now is when it counts and when it matters. And where spring matters actually is some of the issues and concerns with late plant, with, planting in less than ideal conditions, mudding it in. That's, kind of the term you hear, mudding it in. It's just less than ideal conditions, right? So is that problematic, Jesse? Maybe not if you get good weather, right? So everything's about weather. So if you all of a sudden, let's say hard pan it in and don't get good moisture to get good stand counts and then turn it hot and dry, then it's real problematic. So right now is when it starts to matter. And I think the market took a little bit of a step today, in particularly in corn, with moving that direction and putting some weather premium back into price.
One has to wonder how much weather premium can get put in, though. And I think that could be something where we go through the weekend here, the upcoming weekend, and see how much heat maybe builds into the Eastern Corn Belt in particular. Maybe it could give us a little more of a rally here as we get into next week, potentially. I have to think, though, too, farmers should maybe be on their toes a little bit here if we can get a slight sustained weather rally in the row crops. It could be a good selling opportunity, Brian.
Well, I think that's initially how all of us who are in the business have to look at that. So I'm talking about farmers, talking about people like me who analyze the market, who take a look at charts and things like that. What does it look like? So corn, got a big hit when it got into that area, that 490, 495 area. When I say got a big hit, it flipped over and it wasted no time going from 495, 496 to under 460. Just lickety split, right? Now we bounced back some, got through a couple of moving averages today. We're up against some pretty hefty resistance here. But initially, rallies need to, in an environment with big carryout, we have to look at those as some type of an opportunity to sell. And sometimes things are a little easier than they seem if we don't overcomplicate it. It's June. You get a rally up toward the highs in June. You need to start dishing some of this product out because the rallies disappear very quickly in weather markets if the weather takes a turn for the better.
On the soy side, 3 days in a row of old crop soybean sales. Sounds like China's maybe back into this U.S. soybean market a little bit unexpectedly, maybe. I'm hearing some rumors they're looking for some August, September beans. Your thoughts on that? I mean, can we really say China's back, or is this just an aberration, so to speak, in the soy market, Brian?
I don't think I'd call it an aberration. I think we can say that China's back, but I don't think they ever went anywhere. They're just a shopper and they find cheaper product, and with big production out of the Southern Hemisphere and maybe some, political things there. But they've been a pretty steady and consistent and big buyer around the world, just not necessarily from the U.S. But the U.S. has good product. It's available. It's probably more competitive now, or at least perceived as competitive price-wise, when the market's still trying to figure out what exactly is going to happen with Brazil and taxation or lack of taxation, or if that's been disbanded or will circle back. But it's that time of year. Typically, China's buying inventory As the Southern Hemisphere inventory becomes more exhausted, they'll buy U.S. inventory. As the Southern Hemisphere over the last half a decade has increased in their size, they've been less apt to come to the U.S. But nonetheless, they're a buyer. They're in. I'd like to think that they'll maybe fulfill some of the expectations the USDA has, but I wouldn't plan on it yet. I just look at every purchase of a bean right now as northern, southern hemisphere slash, put them together. As long as they're selling and moving, that's good.
Well, weekly export sales look to be all right as well on Thursday for the most part. As well, we saw USDA didn't make much in the way of adjustments on the WASD for South American production. There was a slight cut to Argentine beans. CONAB out Thursday morning. They looked like they bumped up some of their production estimates to get a little closer to USDA. There's still a bit of a wide chasm there, but you look at South America and some of those updated numbers, and it feels like maybe things are starting to inch a little bit closer on the production estimates there, Brian.
Yeah, and I think those will come in. What'll be really interesting is that the USD has been sort of very pragmatic and slow, just like they were in the US last year when it looked like, boy, it was hot and dry. Maybe they should be lower in yield. And they did lower it some, but then they had to backpedal too at the end of the year. So I think they're pragmatic in the sense of we're not going to get over our skis too fast and too hard. And then look, today they got some of the, from CONAB a little bit of an inch higher, so that might be the USD's kind of confirmation that maybe there's total production might show some more acres ultimately in the end. With that being said, though, there's still a pretty wide gap, and the point I want to make is if you're a feed buyer or you're someone who is buying proteins, recognize that if the USDA does lower the southern hemisphere production, that'll come in future months. Maybe it comes in July or August, but it's likely to come at a time where if weather is less than ideal here, it's going to be sort of that 1-2 bullish punch where all of a sudden we've got a crop that might be stressed and we're seeing reduction on the world supplies. All of a sudden it's in a position to take off. So just prepare for that. So we talked about getting that first rally, making sales. I'd say make sales or go ahead now and buy calls to cover those sales. So if the market rallies, you have confidence to sell more, or if it's really taking off, then you hold off selling and you've got your sold bushels covered.
Any thoughts on the outside markets as well? There's been a lot of data there this week between the CPI, the producer price index. The PPI was out Thursday morning. You had the Federal Reserve held interest rates steady. I know that's given us some added volatility and some fodder in the outside markets. Any thoughts there or any impacts you've seen into commodities here this week, Brian?
Probably the biggest impact is how does it affect the US dollar, right? So the dollar's up today, had a big slice down yesterday, did rally back toward the end more, but our interest rates, are they eventually going to come down, or they're going to hold, or they're going to move up? So one of three scenarios, right? And the can kind of keeps getting kicked down the road. So as far as multiple cuts this year, it's not likely. Will there be one or two? I think that's still a stronger convention or conventional wisdom. But right now, with the interest rates at the higher level, maybe they could go up. But nonetheless, it's still created an environment where dollars from foreign buyers want to buy U.S. debt instruments. So that's pushing the dollar or supporting the dollar. That's not necessarily a great thing for U.S. exports. I always call the dollar the swing vote. So right now, the swing vote isn't helpful in exporting U.S. product.
Well, and we think about, we were talking that China demand for soybeans here, but to your point, if that US dollar keeps ticking upward and upward, demand overall has been fairly poor for US grains, I'll say, outside of corn. Mexico's largely been a big supporter of US corn here as of late that's helped that out, but largely the demand picture hasn't been overwhelmingly friendly, I guess is how I would put it, Brian.
Exports are okay. Ethanol is okay. I would classify okay, good, great. So okay to good in the corn. I wouldn't say they're great, but they've been very consistent, solid on the exports. Corn again showed that this week. And anytime you're north of 40 million bushels, it's a pretty solid number. So if we can average 40 million, there's 52 weeks in a year, that's 2 billion. So, we want to, at a minimum, see that, like to see that number stronger. So not too worried there. A little worried about the beans, though. Residual excess inventory, big supplies out of the southern hemisphere. Uh, but big picture perspective, again, the dollar it's one of those things that can carry momentum or it can start to squash momentum. So we keep an eye on the dollar.
We're talking with Brian Doherty from Total Farm Marketing here today on Market Talk. Let's look at the proteins and dairy here before we wrap things up today. Cattle trade, it felt like it was a consolidation day early, and then we kind of turned the market around and found a little bit of green in cattle futures. Cash trade still kind of developing here late in the week, which is pretty typical. Your thoughts on some of that action in the cattle market on Thursday, Brian?
Yeah, I sound like a broken record, but yeah, really good day today, actually, from considering the volatility in the market trading range. I've just happened to be glancing into August cattle, for example, high price 179.67, closed 179.50, real close to the high, but the low was 176.85. So really solid leap off the low. To your point, good solid finish. Feeder cattle were down $2.50, $3 during the day. They came back to steady or small losses. Hog market still looks pretty sour though, which has kind of got me scratching my head. I just don't know when that market's. I think is so oversold, but it just can't get a bit of footing here. But the big bull market right now, it's hard, for us to be talking this, but it's just milk. Milk's just had a really good pennant formation, kind of triple topped here. I was talking to a dairy producer. I said, I just don't think triple tops have a lot of validity as far as holding. Double tops, yes, triple tops. So we got new contract highs established on multiple contracts today, with August leading today's gains and highest close of the season, 21.55. Really solid numbers there, worth noting, worth paying attention to.
In the case of that hog market too, is it just maybe a case of there's so much negativity and a lack of enthusiasm that bad news just keeps piling on bad news, so to speak? There, not necessarily bad news, but just the downward momentum just continues to. It just feels like it just keeps piling on, and it's not giving that hog market any chance to find a bottom and breathe a little bit, Brian.
Something's missed, and when I say the missed, you have a market that should theoretically, with pullback in prices and compared to beef, it should be generating really solid demand, right? Really good demand. And we often talk about those summer months in the 90s or better, good prices to work with. This year, though, trading well above 100, giving that back again at a time when the cattle market seems to be holding very well. So the struggle is to understand, well, what's wrong with the hog market then? Well, I don't know if there's anything wrong with it. It's just that the consumer isn't. They're just not chasing it right now. It looks like, and so that's problematic. But something's going to give. Either hogs are going to go up or cattle are going to go down. I would certainly start watching for some opportunities if you're a spread trader to sell cattle and buy hogs.
All right, Brian. Final thoughts from you here today. Anything on the risk management side, particularly as we mentioned at the open, we're kind of entering into this weather market. We got the big USDA reports at the end of the month with grain stocks and acreage, et cetera. So, I mean, any thoughts for you or anything else you want to reiterate to producers as they're watching their marketing here, middle of June?
Yeah, right. So marketing really doesn't take a day off. So stay at it, or whoever you're hiring to do it, have them stay at it. Look for opportunities here. History will tell us over and over and over again that it's hard to pick a top, but when you do sell rally and the market tips over, you're selling in an upper range. It just makes life a little easier rather than making the decision to make no decision and wait and see what happens. And you have a bunch of inventory. At some point, that gets cheap, right? And it doesn't mean you've sold it down there, but you gotta deal with it. So my point is, look for the rallies when they come. Have some price orders in there. You can manage that responsibly, 5-10% sale increments, but those are really big sales down the road. If we saw last year where a lot of people put corn storage and it did nothing but lose value. Well, if you had those sales or puts bought against that certainly made a difference.
Brian, if folks want to reach out to you there at Total Farm Marketing and get some advice on their marketing plan, I know there's multiple ways to get in touch with you, starting with a phone call, right, Brian?
Yeah, phone call's the simplest way. A little bit old school in that we like to talk to people, hear from people. So phone call 800-334-9779. If you're one that, 9:30 at night want to ship us an email, fine. Brian with a Y at totalfarmmarketing.com and throw your question into that email. And then you can always check out our website, www.totalfarmmarketing.com.
Brian Doherty with Total Farm Marketing. Always good to chat with you, sir. Thanks for being with us here today on Market Talk, and have a great weekend. We'll talk to you next week.
My pleasure. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.